Good morning, everybody. Welcome to Guardian Tax Law. Hubert Johnson with Guardian Tax Law. Tax is made easy. Today, we're going to focus on payroll cases. So, again, payroll is very, very important. Again, the IRS is very aggressive about this. I'm trying on a virtual background. I'm not sure if I like it, but want to focus on the material here that whenever your business grows to the point where you should have W-2 employees, and like we talked about yesterday, be very careful about classifying them correctly as W-2 versus 1099. Again, it opens up another world of responsibilities, but at the same time, it can make life a lot easier for you and your employees when it comes to taxes. So we're going to come back to that as right after the commercial break, which will be coming up shortly, and this will be a very interesting and important episode. Welcome back, everybody. Just want to thank everybody that's watching live or on rebroadcast. So one of the things I want to touch on here is real quick, we're going to cover a little bit of IRS news. And for those that are in Michigan, in particular counties, they had a disaster relief announcement for those areas. So again, if you live in particular counties, in particular Eaton, Ingham, Ionia, Kent, Livingston, Macomb County, Monroe, Oakland, and Wayne counties, you have some extra relief. So if you go to irs.gov and type in news or IRS news, the news releases should come up, and it talks about, they had severe storms, tornadoes, flood control issues. So their deadline to file just got kicked out to June 17th. There's other relief available. You should go through this. And this is actually a fairly common thing for the IRS. Hurricane Ian was declared a disaster relief area. When you had flooding and mudslides in California, part of those areas were declared a disaster area. So the IRS is aware of where there's local disasters, and they will give people time. But use that time wisely. Get your stuff done. Stay on top of it. But just want to mention that the disaster relief areas that get announced. So if your area gets hit hard, hurricane, flood, other disaster, check and see if it's been declared a disaster area, and you can take advantage of that extra time. And they're even giving some extra time to make estimated tax payments, and they will abate or waive penalties if you are late in certain areas. So again, you have to fit the time frame, but they are giving extra time and to make payments and also file taxes for people in that disasters area. So that's always good to know that, again, politically speaking, whatever, it's always a good thing to be aware of when people experience disasters and make adjustments for that. And that is one thing the IRS does do on a regular basis. I know usually I'm pretty sour on the IRS, but there are some good things, and that's been historically something they've done. Again, I'd like to recognize when they actually are doing that and get that information out to you so you know how best to deal with the IRS when you are hit and dealing with a disaster like that. So we talked a lot about starting a business yesterday, kind of from the ground up, listed some very important things to do. And that will save you a lot of heartache down the road. We'll also let you know how your business is doing, how to manage your business, etc. So I was at a conference yesterday. It's a eWomen conference, and it was the head of the national conference was there, and she was talking about how many businesses actually survive. And she said for 20 years, for a business to make it 20 years, only 2% of businesses on average make it. Why is that? Most small businesses fail. Why is that? Is it because people don't have the desire? No. the economy changes. COVID caused and post-COVID caused a huge number of businesses to fail. But if you're riding that cusp, you don't have good numbers, if you don't know what's going on with your business, when the economy turns, when things slow down, it can hurt a lot of people. Right now we're seeing the same thing in the housing market. So things have really slowed down for a lot of realtors, a lot of mortgage brokers, and people are scrambling, trying to make ends meet. So take good steps, learn how to run your business, learn good practices, and that will help you and your family survive tough times. And one of the important things that she emphasized was pivoting when things change. So I want to focus mostly on W-2 employees today. We talked about 1099 employees. Make sure you pay them, make sure you give them a 1099 at the end of the year. But aside from that, 1099s are easy. Just make sure they're truly 1099 employees rather than, they're essentially independent contractors. They work for other people. They come, they do a job, they leave. So if it's by job, if it's they work for other people, there are a list of factors that help determine if someone should be a 1099 and W-2. And if it's half and half, treat them like a W-2. Err on the side of, look, we need to treat you as a W-2 employee. And if someone doesn't want to be treated like a W-2 employee, they want a 1099, but they really should be a W-2, it's not worth the headache and hassle that it can cause your business. And that's what we're going to talk about today. So first of all, it's not just the IRS you have to worry about. It's the Department of Labor, or whatever the labor department is called in your state. If they come through, anything happens, anybody says, hey, I need a benefit, and a lot of this happened during the pandemic, people asked for the PUA relief, or they asked for unemployment because all of a sudden most businesses were shut down. Anything in person was shut down. So this triggered an audit for one client. He came in and was beside himself. The Department of Labor in Arizona was trying to reclassify his entire workforce, going back years. And he says, we have to change up the way we do things. We are very flexible. They come and go. But this is a huge problem. And I've seen this in other cases as well, where people believe you used to have more flexibility. If someone wanted to be a W-2 or 1099 employee, the IRS didn't look that closely at it. Not anymore. Not anymore. It can cause way too much damage. So it's not only the difficulty of filing an audit with the Department of Labor, but then you have to file back taxes, 949, 41s to report payroll taxes, and you do not want to owe these kinds of taxes. So the two types of taxes that are the nastiest to deal with as a business employee, as a business, is one, sales tax. Two, and this is for most business, the second one is payroll taxes. So you never want to owe either one of those. Now, sales taxes go to the states. The states are very aggressive about sales taxes because when you charge the clients, you should have collected the tax, and most businesses do collect the tax at the time. So when you charge that and you get the money, but you don't send it to the state, they have a big problem with that, as you can imagine. So there's usually not a lot you can do when it comes to sales tax, and sometimes there's city sales tax or property taxes. The smaller you go, as far as organization, as far as if you're dealing with the city, a local municipality or city, they're going to be less willing to work with you than the IRS. The states are going to be a little bit more willing to work with you, but a lot of times you might ask for a penalty abatement. You might be able to get some of the fees waived, if that. But most of the time, people end up paying the whole thing. Now, that's if the business is open. If the business is closed, it's a different story. Usually, and it varies by state. In New York, you can do an offer and compromise on payroll, on sales tax, if the business is closed and if it's been closed a while. So again, if it's a failed business, they can treat it differently, and the IRS does the same. Payroll liabilities. How do you pay payroll? First of all, if you're not sure, you're not familiar with the forms, you're not familiar with the rules, you should hire somebody. There are plenty of payroll companies out there that will do it for you. Just make sure you hire someone that has a good reputation, because I've seen too many businesses burned by someone not doing a good job. And I'm talking about big companies and small one-stop shops. So if you do have payroll, you need, it's just a huge thing, follow up on it, make sure they at least send you the returns, because I can't tell you how many times someone needed a return, their payroll returns, and they're no longer with somebody, they can't get the returns, they don't know what's going on. You should always get a copy of those returns. Now, recently, that's become a really big debt, or a big issue going through payroll or COVID and all these COVID programs. People have to go back and recreate a lot of things, and they don't know what happened. The PPP loans, you had to have your payroll reports. Happened to me. I had an accountant. I was fairly new in my business, and I was entitled to all my records. When push came to shove and said, hey, I need those for the PPP loan, I had already moved on because the person wasn't a good fit. And she absolutely refused. Legally, I could have taken it to court and won on that matter, but it was such a headache and hassle, I didn't bother with it. So, and I had other issues with the PPP loans. I didn't trust the government to actually forgive those. And I know a lot of people got those forgiven, but that's where I was coming from. If you're going for SBA loans, EIDL loans, another big, you need to have your records put together. Another big issue is the big fad lately is ERC, so Employee Retention Credit. This is one of the biggest things that people are applying for lately. Make sure you're doing it right, because we're probably going to spend a whole session just on the ERC and how a lot of people are getting burned. But you have to have your payroll reports, your payroll returns done and ready to submit. So that is another big issue there, is having those payroll issues done. So having good records, make sure you have those returns, make sure that you get those and everything's processed is very important for your business. And also to make sure that when a program does come along, not only do you have good records, or if the IRS comes along and says, well, what happened here, here, and here, it's always important to have those records. If they question, did you file everything on time, you have them. Believe it or not, a lot of returns are filed but never processed, because the IRS is bad at their job in general. Yeah, they get millions of returns, so to be fair to them, but it is fairly common that if you submit a return, that it gets lost. If you do it electronically and you get a confirmation, that's usually a pretty safe way of doing it. But whatever you submit, you always need to get a copy of it, and two, you should verify that it's been received. So you can pull your transcripts for your business. You can go, get an IRS.gov account, and you can set that up pretty easily. And you can always see what they have, see what's going on. We hit a break, and I'll be right back. Welcome back, everybody. I was just talking real quick about payroll and with W-2 employees, how it is very important to make sure that you get your returns, your payroll returns, you know what's on them, and that you keep good records of them. So there's a lot of different reasons why you need those returns, not only for the health of your company, but also to, if any kind of program comes along, if you're applying for any kind of government loan, you might need that. Or, in case of any audit, having those records is very important. It's one of those things, you just save the returns, you just file them away. That way, if anybody needs them, you have them. And I would keep a hard copy as well as an electronic copy. You never know what could happen to electronic devices. So when it comes to W-2 employees, you have to withhold taxes from their pay. And any payroll company or any professional will know how to do this, but you're withholding the federal taxes, Medicare, and Social Security. Those are the main taxes. And, there's some smaller taxes thrown in there. Now, this is going to cost your business. If you're paying someone a 1099 and you're paying them $15 an hour, by doing this, you're going to increase the cost to your business, because if you switch them to a W-2 all the time, all of a sudden it's not $15 an hour. It's 15 times 1.075. Now it's $16 an hour, $16.13 an hour that you have. That's the true cost of having an employer. Roughly half of those taxes come from the employment taxes, Social Security, Medicare. Half of those come from the employee's paycheck. That gets withheld from their check and sent to the government. You should do that at least quarterly. If you have any problems staying on top of this, I would just send it regularly. And if you have large enough payrolls, the IRS will require that you pay it regularly, not just quarterly. But you want to stay on top of that. There's no reason to hold on to those funds. It just can create a big issue if you don't. So just be very aware that it increases the total amount the company has to pay for employees by 7.5%. The true cost of Social Security, Medicare is 15%. And half of that's paid by the employee, half of that's paid by the employer. You get credit for that. Paying it, it's a valid business expense, but there are other things that you have to watch out for too. So there's unemployment insurance that you have to pay through the state. You have to be registered with the state and make sure that you are complying with state regulations when it comes to employment insurance or unemployment insurance and other issues that, again, matter and can hurt you. So that's not my specialty, but again, I do it, and it's something that definitely can hurt people. Again, remember, the states are very aggressive about these things. So why would anybody want to go W-2 if it's an increased cost to the business? Well, in reality, businesses have to understand what the true cost is and plan accordingly. So every time the cost goes up, and mainly through minimum wage increases, whatever, you just have to understand that's an increased cost to the business, and it helps you plan and budget when you know what the true cost on your bottom line is. So for your employees, most employees prefer W-2. They don't really have to worry about their taxes. They just have regular withholdings. As long as they are withholding the right amount, it helps. A lot of employers like to put themselves as W-2 employees. Why? Because then the IRS is automatically deducting, automatically taking everything out, and so they have to worry a lot less about their taxes too. Just makes it easy, so you know what you're getting, you know what you can live off of, and your taxes, most of your taxes are already taken care of. We did talk about K-1s, if you're in a partnership, or your profit and loss statement, so that you will get taxed on net profit on top of that. So that's why you should still be making estimated tax payments if you're a business owner, and doing those quarterly profit and loss statements, because that'll tell you how much you should be paying and what your business is, what the health of your business is, but also, help you keep track and make wise business decisions as well. So if I'm repeating this a lot, it's because it's important. Okay, so when life happens, something crazy, either your payroll company messes up or the business is struggling, and someone doesn't pay payroll taxes, what do you do? So we're gonna step a little bit into, okay, here's a problem, and it's very scary when you owe with payroll taxes. It can be. I've had people hire me. One gal, she had ignored the IRS. She had buried her head in the sand for so long. It was it was pretty silly. When she finally called me, she said, "Look, I need help. I need someone that can solve this." And I said, "Okay, I handle this all the time. I'm an expert." And she said she had a summons. Now that doesn't sound good, nor should it. When the IRS issues a summons on you, they can issue subpoenas and get bank records, other information. If you're not providing requested information, that's valid and legal for them to request. They can issue subpoenas, and they can issue you a personal summons. So when the IRS issues a summons, should you show up? Absolutely. Do you have to? Well, not until you don't technically have to unless they issue a warrant for your arrest, which can happen. I've seen people play with that, and that's usually when I say, you know what, you're not listening to me, you're not doing what you're supposed to. I'm not going to watch you go down a criminal path. And I've only had one client ever ignore us to the point where they had a second summons, and they blew that off. And that's not, you know what, we're not. If this is turning into a criminal case, you need to go hire a criminal defense attorney, because you're not listening to us. You're ignoring everything we're telling you, and we're not going to watch you implode your case and go to jail. Now, that's very, very rare, but in this case, the gal had a second summons. This is kind of a what not to do story. I didn't even know it was a second summons, so I walked in. It was an in-person meeting, sat down and met with the. No, actually, it was a local thing, but I think we did it by phone, and that's when I found out it was a second summons, not a first summons. So I was able to get some deadlines, get some time for her to comply. And I said, look, you absolutely have to do this. There's no question here. You need to do this. We scheduled a time for the revenue officer to come and tour the business, because that's what they will do. That's part of their thing. They can actually come out to your home if you work out of your home or your place of business. And that's very scary. Very scary to employees. So unfortunately, in this case, she decided not to pay us. And she decided not to turn in any of the documents that the revenue officer had requested. We were still on the case, though. We hadn't officially terminated representation, and it gets really dicey legally to terminate someone right before, or to fire a client right before a big exam, or in a very important time in the case. So I was still working the case as best I could, and so I showed up when the revenue officer went to the business, because of course that's my ethical duty as an attorney. She had a clipboard. She went through. We got the manager that was there. The owner was not there for the meeting. She knew about it. And we walked through that business. And the revenue officer was basically making an inventory of everything that was a fixture and attached to the building. And anything that wasn't, the IRS could go and seize that property and sell it. So anything that was not physically attached to the building, like installed into a wall or anything like that. All this, and that's really scary. And the employees there were just stunned. They're like, "What's going on?" And because she didn't respond, about a week later, the IRS literally padlocked her doors. There was a coffee shop, and they went in and padlocked the doors and said, "Okay, you're closed." They had already hit their bank accounts. They had already hit their vendors. Then she responded and called me up and said, "What do I do?" I said, "Well, I told you what to do a couple months ago. I told you what needed to happen. I told you this was urgent and immediate." She goes, "Well, how can I stop this because now my doors are closed. I said, well, you can either comply now and get me everything you need. But I think she had gone after her vendors as well. At this point, she was finally crying uncle and finally getting involved in her case. And I said, look, the only way to stop this, because it's gotten so bad, is to file business bankruptcy. So that's what she had to do. And again, she worked herself into that position. Another horror story. And I'm sharing these not to scare people, but to say, look, if you put your head in the sand, if you ignore everything happening, you ignore your attorney or represent tax professional, it's going to get worse. Almost guaranteed, it's going to get worse. And if the earlier you deal with it, the worse it is. So this guy tried to hire us. He had hundreds of thousands of dollars owed to the IRS. And the funny thing is, he owned a car lot. So my very first call to the revenue officer, he was going to pay us. It was an emergency case. Of course, it was a Friday afternoon. And I think he had already paid us. So I called the revenue officer and I said, okay, introduce myself. I'm faxing over my power of attorney, just letting you know. He's like, oh, well, you're like the third or fourth attorney on this case. Whoop-de-doo, here comes another one. I said, okay, well, what do you need? What documents do you need? We're going to work to get this done. Once they show that we're being proactive and trying to move the case forward, usually they're a little more lenient. And he said, well, I've already sent him. I'll send you over what I requested, but it's a little late. I said, well, why is that? And he said, because I've already sent this case up the chain for seizure of everything on his car lot. It's already pending before our IRS attorneys, and as soon as they approve that, so it could be a month from now, it could be Monday. As soon as I get that approval, I'm driving to his place of business, to his car lot, with a fleet of tow trucks and bolt cutters. I'm going to cut open the locks. We're going to go in there. We're going to haul every car off of that property. He said, there's nothing you can do to stop it. It's like he'd have to file for bankruptcy to stop this because it's already that far down the rabbit hole. I mean, he could try to comply and try to get everything in, but he's racing against the clock. And, this is a Friday afternoon. It could be Monday, Tuesday, anytime that week. As soon as that order to seize was approved by the IRS attorneys, done deal. He's going to go and seize all those vehicles. So I called up the client and said, hey, do you understand how bad your case is? They're ready to just come and clean you out. And he said, oh, well, I've been getting warnings and notices, but I didn't realize it was that bad. And I said, what's going on with those cars on the car lot? Are those your cars? And he said, no, they're not my cars. They're on consignment. And I said, did you tell the IRS revenue officer that? He said, yes. And he asked for proof. I said, did you provide that proof? He's like, no, I'm still getting it together. Imagine the horror and the mess he would have to deal with the IRS coming in, taking all those vehicles that weren't even his because he failed to prove to the IRS. Every single person who had a car on the lot would have a cause of action against him to sue him in court. And he would still have the IRS to deal with. And they would sell it at auction for, a fraction of what these cars were actually worth. Worst case scenario. Let me share a different story. Again, the doctor's office, payroll issues, about $360,000 owed. The head doctor brought me on at first and wanted to keep it quiet, but we had to do a sit-down meeting, and I met with all the doctors, explained to them what we were doing, explained to them the situation, and when we sat down with the revenue officer, we had all the documents together. We'd already put it together. I had an idea of what she wanted, and so we sat down, and she gave us this form, called the 9297. This is everything I want. We already had most of it ready for her. I said, okay, here's a few missing items. We were preparing before you even got the list. Let's knock those out. And she said, oh, wow, you're ahead of the game. I said, absolutely. That's what we try to do. So we got those last few items. We got it to the revenue officer. We got it set on a payment plan. No garnishments, no levies. They didn't go after vendors. They didn't hit the bank accounts. They had it easy. And eventually, over time, they had paid in about $97,000 in, but we did an abatement to get the interest and penalties removed, and we got the entire $360,000 penalty removed. That was a special case. But again, if you deal with this upfront, don't bury your head in the sand. Call a competent tax professional, make sure they're doing their job right. And sometimes it might take, we stopped the revenue officer. And again, when you're ahead of the game, I got along very well with the revenue officer. She was pretty easy to deal with for the most part. She came in and she breathed her fire. Here's all the bad things that can happen. And then when we gave her everything, she goes, "Oh, okay. Well, then none of that's probably going to happen if you guys keep going like this." And it can save you so much time and headache. It can save your business. And that's a big part of our why, is saving businesses, really helping individuals and businesses deal with their past due taxes and get on the right path moving forward. And being proactive is absolutely the way to go. So when you do have payroll issues, if it's something that you can't pay off quickly, call a tax professional. Get some free advice. Make sure that you're ahead of the game. And again, if you are in that situation where life is crazy, I've saved plenty of businesses that had received a summons that, there's been some where they've received a second summons, and we jumped in both feet and started working the case right away. So again, it doesn't matter where the case is unless you're ready to have all your accounts cleaned out or something like that. Again, I've seen businesses go into bankruptcy. I've seen them padlocked, but these are where they've waited, then they've ignored their attorney and just procrastinated until the hammer dropped. So we're coming up on another break. After the break, I'm going to talk about steps to go through when there's an issue and how to resolve this. What do you need to do? And we're also going to talk about TFRP penalties. Hopefully we'll get there as well, and how those can be assessed to you personally. So that's the scary part, is not only can payroll taxes be applied to, and assessed against the business, but the employer portion can be assessed personally to the taxpayers, or the employees, the employer, sorry. So you can be, as the owner, you can be held responsible for TFRP penalties personally, and that is a very scary thing. But again, we work to prevent that and protect personal assets as well. Sometimes we can't stop the assessment. A lot of times we can't. But if you are ever in a business, and we're going to talk about that as well, if you're a partner and you know something is going on, you need to address this. Because if you ignore what's happening and you're connected to a business in any way, you can also be held liable as well. Even though you're not one of the owners, you're not a majority partner. So that's really scary part. And we're going to dive into that after the break, which is in about 10 seconds. So I'm not trying to scare people. I just want you to be very aware of the reality of the situation. The IRS hates to seize property, but they will if they have to. And we'll be right back. Welcome back, everybody. So we're going to finish up with some positive news. I think it got a little scary there for a moment, about what could happen and what I've seen happen with cases. So the positive news is, by getting ahead of this, by addressing it, no matter where you are, you usually can. It's rare that we can't help you. The guy with the cars being, that almost had his cars towed off his lot. And he called back and he was going to pay us $7,000 to represent his case. He was $7,000. I told him, don't pay us. We'd already made a couple of calls on your case, but I said, there's not much we can do. I cannot protect you You have to go file for business bankruptcy on a Friday afternoon. He called the guy, called us back and said he wants $20,000. I said, pay the man. That's the only way to protect much more damage if someone comes and cleans out your car lot with tow trucks on Monday. So that's the worst case scenario. Best case scenario, you come, you don't wait till the IRS is breathing down your back. You contact either us or another tax professional and get your questions answered. The sooner you do it, the better. So number one thing you need to do, it's the same as anything else. Payment compliance and filing compliance. So first of all, start filing your current periods. The IRS wants to show, or they want to see, that you are filing your returns and paying estimated your payroll taxes regularly. So I don't care if you have a bunch of back taxes owed, start filing your tax returns and start with the most current and then work way backwards if needed. But they want to see that you're filing your returns and that you're making payments. They call it pyramiding if people keep adding taxes on every quarter. And it's the same concept for personal taxes. If you are adding taxes year after year, they get to the point where they said, okay, we're done working with you, we're done playing with you. You're not getting it. If you default on multiple installment agreements, they can get to the point where they say, okay, we've given you a couple shots. They do not have to give you installment agreements forever. Now, if you're on an installment agreement for a few years, something happens, situation changes, that can be treated a bit differently. But don't just set up installment agreements as a delay tactic. In most cases, I never recommended that. There might be rare exceptions, but again, don't play with these kinds of taxes and taxes in general, but especially payroll taxes. The IRS cannot even consider giving you some kind of deal or break until you're paying your current estimated tax payments and you're getting your tax returns filed. That's what they care about. And that might not be the number one thing that they'll say. They might say, hey, you need to pay us, you need to pay us, you need to pay all these back taxes. But once you do those two things, you start filing all your returns, all your missing returns, and you show that you're paying moving forward, then you can negotiate about the past due taxes. Now, this changes dramatically depending on whether your business is still open. The goal for most people is to keep their business open. They want to preserve and maintain their livelihood. So this is where we have to take a hard look at a business and say, look, this is what it's going to look like to pay this balance off. They can give you time. They can give you 6-7 years. With payroll, they like to shorten it, but again, you can usually get the longer period. But you have to pay the balance in full if you're going to keep your business open. So the question usually is, look, this is what you're looking at a monthly payment. Can you afford to do this? Can your business afford to handle this kind of payment? And so this is why having good numbers is so important, so you can look at your profit and loss statement, you can look at what your true income is, net income from the business, and say, okay, we can handle this or we can't. Then you can look at alternatives here. So this is a trick. So this is not something I normally recommend. But if you don't have employees anymore, then the IRS, they treat it like you don't have a filing requirement anymore. So let's say you either let your employees go or you transition them to a 1099, which again, I would only do that in very rare circumstances. And I haven't done it for years because of the changes that's happened. But if someone is truly a 1099 employee, it is possible to change them to a 1099 from a W-2 stop paying yourselves the W-2 wage for now, at least until you get a handle on this. That means that you have to handle your personal taxes better. But that cuts off the filing requirement and the need to pay payroll taxes moving forward if you don't have any more payroll. So this is ideal for people that have been paying themselves a W-2. They've run into problems. They haven't kept up with it. Fine. Maybe if W-2 is not the way to go for you. But it changes up what you're looking at as far as if you have a large payroll balance, all of a sudden, it opens up more options. So the two things here, if you stop paying payroll, or you can close your business down, it opens the doors to you can do an offer in compromise, you can do a hardship status. All of a sudden, if the business is no longer in operation, especially, you can go for a offer in compromise. Now, this is not something I normally suggest, especially if you have multiple employees, but you have to make a hard decision. Can the business afford it or not? So if a lot of people will make adjustments, they want to keep the business open, but there's times the business is losing money. And the writing's already on the wall, and so we'll help them transition. It's okay, maybe if we shut the business down, if it's losing in money or they were planning on closing it anyway, we will help them through that period and say, okay, maybe the best thing is to shut it down, and we'll help wind down the business. We'll make sure the payroll liabilities are addressed. And so regardless if you keep the business open or not, the IRS will come through and do what's called TFRP penalties. Now, they only have 3 years to do this once they get involved in this. So it's part of their routine. And there are times where TFRP penalties are not assessed. It's the exception. They're almost always assessed. Now, I mentioned that even if you're not the owner, you can get hit with these TFRP penalties. So they're trust fund recovery penalties. And so what the penalty is the FICA taxes that were withheld and the employee's portion of Social Security and Medicare. So really, it's what would have been withheld from the employee's check that was not sent to the IRS. So again, this is why they treat it as you're stealing from your employees if you don't pay these taxes, which is why the IRS is very aggressive about this. And when you talk to most people, if you owe these kinds of taxes, the IRS can be very, very unforgiving when it comes to these. Now, for business owners, I get it. It's just another tax. It's just another tax burden for you. But the IRS in their wisdom, or Congress in their wisdom, decided to hide half of the taxes and put that burden on employers, and it's a lot easier to go after employers than all the individual taxpayers. So they're making you shoulder a big burden, a big portion of the burden for the IRS. So the TFRP penalty, and I might have to talk about this tomorrow, but just to give an introduction, the revenue officer will sit there and look at everybody in the business. And the question is, did they have any kind of decision-making power? Were they part of the decision to not pay payroll taxes? So you can be a secretary. You can be just the person signing the checks and have no real say. But if you're the one signing the checks and mailing them out without payroll taxes, you too can be held responsible. So a lot of times when I get a new case, this has already been done. And you can ask for an equivalent hearing. You can ask for it to be reopened. That's hard to do, and it's hard to contest. So I had someone who was a minority owner in a company and had essentially gotten shut out of the business. The revenue officer went in. He didn't even know about what was going on. But she went in and she did her investigation. She held her interviews and sent a notice to him. He never got it, but she assessed these taxes to him as well as the majority owner. The majority owner, kind of disappeared, couldn't be found. He wasn't taking care of the taxes. He let it happen in the first place. And so the minority owner was the one that moved on, was making money and earning money, and the IRS came after him for the taxes. Is it fair? Is it always fair? No. So this is why when there's an issue, get representation before you get burned. If you're the owner and you're the one making the decisions, it's going to be assessed against you. But I had a case recently where it was a mother and a daughter case where the mother had put the business in her daughter's name, so if anything ever happened to her, her daughter would have the value of the business, etc. And it was a way of passing the business down to her daughter. Her daughter, however, didn't really have anything to do with the business. And it helped that she had some mental issues because we were able to show that, look, she was not capable of running the business. If this was passed on to her, there was a plan to have someone help her run it and pretty much do most of the work for her. But that the mother was the one taking full responsibility and saying, look, it should all be me, not my daughter. Don't hang this around my daughter's neck. And the revenue officer was able to make a compelling case, and she agreed. But more often than not, they're going to want to assess it to everybody that had a hand in the business. So I had a company with 3 different owners. All 3 of them were assessed payroll taxes. None of them knew about it because it was actually their payroll company that messed up in a big way. But they all got assessed these TFRP penalties. So tax fund recovery penalties is the name of it, if you want to go ahead and look it up. So be aware when they do these interviews, you want to participate. If you don't participate, you're going to have the full thing assessed against you. But it's a way to communicate with the revenue officer, paint the picture that you want, and it's part of the negotiations because, believe it or not, it matters when you can get the revenue officer on your side versus the revenue officer's not on your side and you're butting heads. That's when things get nasty a lot quicker. And I've had revenue officers be very, very patient with some of my clients to the point where I'm telling the clients, look, you have to respond. You have to get on this or the hammer's going to fall. If you respond quickly, we can usually address these issues, protect you from most of the damage, if not all the collection actions. I had cases, the case with the doctors. I told them everything that could happen just to make them aware. And I said, and then later on, they're like, well, it wasn't that bad. It's like, yeah, because we engaged, because we did everything right, because when I asked for A through Z, you got me A through Z, and I was on top of you to make sure we got it. And it just saved you from so much headache. And I said, talk to other people, read about other cases and see what happens in these cases. And they did, and they said, oh, okay. And then they realized how much headache we actually saved them from. We're going to have to continue talking about payroll, the TFRP penalties. Once they're assessed, it's treated like pretty much any other kind of debt. But if the business handles it, can make those payments, if the business is going to stay open, they can address that. And again, there are plenty of revenue officers, and the rule has changed now, whereas before I used to always be able to keep the revenue officers from going for their personal assets. And I usually do that. Still, I'm able to do that, but the rule now has changed. So because it's all about negotiations, it's about establishing a relationship, showing them that you're on top of things and doing what you can. Because I try to establish that rapport right away with the revenue officer, I've been able to keep them from going after the personal assets of the owners. But now the rule of thumb has changed so that the IRS can and usually does go after personal assets as well as business assets. So that's why it's so important to get engaged, deal with this immediately so the IRS isn't just going after the business. You don't want them going after you as well and going after any assets you or the other business owners might have. So we still have a lot to delve into regarding TFRP penalties and setting up a resolution with the IRS to stop this. And we're going to talk about this tomorrow because we're out of time. But again, I want to take my time going through this. If you have questions, reach out to thesmc.tv or smartmoneyculture.tv, and you can click on the tab up there and reach out to us as well. So that's the best way to get a hold of us. And it's through the opportunity tab on the top left corner. So again, Hubert Johnson with Taxes Made Easy, and look forward to talking to everybody tomorrow. Number one takeaway, if you have an issue, get help. Don't wait. Thank you for listening and have a great day.